Welcome to the High Value Sales Show of Eversprint.com. I'm Malcolm Louie, the managing member of Eversprint, and today we're speaking with Jason Goldsmith, the CEO and co-founder of CARCHEX, a consumer-focused reseller of vehicle protection plans and other automotive protection products. Welcome to the show, Jason.
Thank you.
Jason, you grew your company's revenue from $32.2 million in 2014 to $56.6 million in 2017, a 76% increase. Before we talk about how you grew your company so fast, can you briefly share what your company does beyond my quick intro and how your company differs from the competition?
Sure. So our background is kind of an important part of the equation here. I'll keep it brief for you and your listeners, but we actually started as a pre-purchase inspection company, and I bought the assets of a little mom and pop company, which was called CARCHEX at the time, after using the service. This is back in 2003. And so we would travel to, and we still do, we travel to vehicles across the country. You may be, if I'm here in Baltimore, maybe I see a car in California, we're able to send an inspector and give you a 155-point inspection and make sure that the seller's representing the vehicle accurately. So, you know, a lot of folks know about Carfax, which is a vehicle history report that tells you about the history of the vehicle, essentially what's happened in the past. What we're doing is getting professional eyes on the car to help you understand the condition of the vehicle at the time that you're buying it. So that was how I got into the business. And then we quickly added, which became the fastest growing part of our business and a driver of that growth that you were talking about just a minute ago, our vehicle protection plan division of our business. So we sell vehicle protection plans. A lot of companies, or a lot of customers rather, have referred to them as extended warranties. Not quite the right nomenclature, but that is that's the type of product that we sell. So aftermarket vehicle protection plans, and that's we've got products from 0 to 250,000 miles on the odometer and up to 20 years in age. So we have a big breadth of product offerings in order to make sure that we can ultimately capture as much of the marketplace as possible.
Now, you have the extended warranty programs, you have your car inspection. What are the other automotive protection products you have?
So we create unique products for other partners. So I'll give you one example. We power the Edmunds Promise program. It used to be called the Price Promise program, and so that's almost like a third-party certification program. So we provide a 30-day bumper to bumper, which we refer to, the right term is exclusionary warranty, or exclusionary vehicle protection plan, and then we offer other things with that. In that case, it's a 12 months of roadside. And roadside's another offering that we have. We do some work with some partners on the auto insurance side and also the auto finance side. But we create all types of products for our different partners that could be combinations of a vehicle protection plan plus something else, or a unique product. We have a CARCHEX certified product for dealers. We have a remarketing program. So we do a lot of work with dealers, car dealers in general, where we help them remarket to customers where they may have missed them in the F&I office. And so ultimately they're trying to capture those folks as they come off their 3-year 36,000 mile or their 4-year 50,000 mile warranty. And we help them do that. We market actually as the dealer for the dealer in those cases. So we do some, we've got our direct consumer business that's very much CARCHEX branded. And then we have some other pieces of our business where we work with our partners and maybe actually just the plumbing in that situation and work under their brand.
Right. Now, all these services that you offer, do you offer it all in-house, or are you reselling, for example, the 30-day exclusion plan of another vendor?
Yeah, so that's a great question. So we're not an administrator. The part which we're just describing is the work of what an administrator does. So when you have a claim, you'd call a particular phone number and they'd adjudicate your claim, and they'd ultimately pay your repair bill if that's covered under your contract. There's a reason why we say we're administrator agnostic, because we actually partner with these administrators in lots of different ways. There's two things that we do here. One, I come from the banks compete model in the lending space. My previous business was a company called theloanpage.com, very similar to LendingTree. And we took that model of being able to get multiple quotes, and we think we fixed what was a flaw at the time. Now that model's evolved today, but you'd get multiple quotes, but you'd also have to talk to multiple people, which could be quite annoying to have the same conversation 4 times, right? So what we did was we actually found the best administrators in the marketplace. We put them into a proprietary system that we've built out, and we offer it kind of a menu for our customers where we're working to get them the highest level of coverage at the most competitive price. And so that's, in order to do that, we can't be an admin. Otherwise, essentially we have one rate card. So we have multiple rate cards where the customer gets the benefit of these competing parties, essentially to provide them that highest level of coverage at the most competitive price. And then secondarily, as I was talking about just a minute ago about our dealer business, one thing I learned early on is that I do not speak car dealer. I'm a marketing and technology guy, predominantly an internet marketing guy. And car dealers speak their own language. And so we built a program for them that was essentially found money. And the objections that they had early on when we talked to them about this program were somewhat mind-blowing. I won't go down that rabbit hole. But the reality was we really needed to partner with folks that knew that business well, that ultimately had those dealer relationships directly. And those are really the admins that work with those dealers and their base of either, in some cases, agents or direct employees that service those dealerships. So by being agnostic, we get to work with everybody, and ultimately we can market in to multiple dealers through those relationships.
Right, got it. So as an end consumer, right, I potentially could buy the same programs that you offer directly from your partners. Or
no, most of the administrators, in most cases, everybody kind of does what they do well. There are some of my competitors out there that are both an administrator and a reseller, or a seller in that case. But in most cases, administrators are more like the insurer. They create the rate cards. They work with us. We kind of create our own programs. I guess I should have mentioned that. So even though we may work with an administrator that maybe a competitor may work with that administrator as well, the programs that we develop together with our own terms and conditions, and they have some level of CARCHEX branding around them. But we still, it's certainly possible that you could buy a similar product from someone else. However, you wouldn't be buying that directly from the administrator in most cases. They don't sell product. They need guys like us who are ultimately marketing and sales agents for them to sell products. So that they kind of do more of the back end in terms of the plumbing that they're responsible for. Right.
Now, oftentimes these car protection plans, especially the extended warranties, when I've researched it, oftentimes the takeaway was because it is a service, they are providing protection, and of course the vendor, the way they make their money, of course, is that the amount that they pay out is less than the premiums or fees that they take in, and that it may not be necessary depending on the car and vehicle you buy, depending on the reliability of the vehicle, right? A car that's more likely to break down, you get better value out of an extended protection plan. And then the cars that are really reliable, maybe not as much value, but you might like the peace of mind. What's your take on that thought?
Yeah, I think that's I'm thrilled that you actually brought this up. I think that's a big misconception in the space. The problem with this space, and it's actually the opportunity that we saw, was really to become the gold standard in this space. These products, a vehicle protection plan sold correctly, the right level of coverage at the right price to the right customer is extremely valuable. And so what was happening in the industry, and it started in car dealerships, we've all had that terrible F&I experience where the whole plan is to keep you locked in that room as long as they can, and so you ultimately submit. I mean, that's been the model since the 1950s, and in most car dealerships it hasn't actually changed. And then that propagated out with a bunch of bad actors that came along early in the space. And so what the opportunity was to get the right customer, the right product at the right time, and at the right price. And the key here is, and you brought up something before, is like, oh, well, if you have this car, maybe a Honda, for example, it's not as valuable as if you have a BMW. And you got to remember this, that just like any other insurance product, the losses are priced appropriately. So the way that I look at it is a little bit different. And I have vehicle protection plans on all my cars. And as you might expect, being in the business, I'm an advocate. But the reality is this. You have three choices when you're looking to fix your repairs, right? Either you're going to self-insure, right? That's an option. If you can afford a $4,000 transmission surprise, maybe you're just going to pay that when that surprise comes up. Your other option is you could create your own savings account, right? Put some money away every month, and okay, that $4,000 surprise comes up. You've only saved $3,000 at that point. You're $1,000, right? You got to come up $1,000 out of pocket, and then what happens on the next repair? Or for about $120 a month over the time period you're paying that, because for us, we do premium financing. So you can finance up to 24 months interest-free. If you're looking at that, well then now let's say that you had the $4,000 surprise, but then you had another $500 surprise and all these other surprises that build up. You've got a way to budget for your repairs. And that's really who this plan is for. It's for people who need to budget. It's not just people who are obviously on a fixed income. It's anybody who wants to be able to budget the repairs. And then the other piece of that is really to make sure that you get the right level of coverage. What we do at CARCHEX is we call it top-down selling. So we're always selling the highest level of coverage first, that exclusionary coverage if it's available in your vehicle. Whatever the highest level is, that's what you're going to be offered from us the first time around. And yeah, there could be reasons why you might want a lower level of coverage, but you're always going to start with that. So if you get the right level of coverage, you're going to get a lot less claim denials, which is what creates complaints in the space. If you can imagine from any insurance business, whether it's a Geico or State Farm, when you think about auto insurance, people get upset when their claims get denied. And if you can sell them into the right product at the right price and minimize the possible denials of claims, that's going to ultimately create a happier customer. And oftentimes in our space, what happens is you've got folks out there basically selling the lowest level of coverage, representing it as if it's a higher level of coverage, and then trying to make kind of the biggest spread or margin. And that's what creates problems for people in the space. And, to anybody who may be looking to research the space or try to figure it out, it's kind of hard to understand all of those moving parts. Yeah.
Is it the fine print that kills people because they don't read it?
I think that the fine print in any contract can always hurt you, but the reality is you should always read the fine print. The nice thing about an exclusionary plan, and why I keep bringing this up, is most people, when they see a long list of things that are covered, they feel like that's the best plan they could get. In fact, an exclusionary plan, that's called an inclusionary plan. Exclusionary is what you want. That's going to be closest to the manufacturer's plan, and it's only going to list the exclusion. So it's going to be things like, paint, your brakes, things that are regular wear and tear items, so that it's easier to determine what's not included. And then there's other things that you need to look at. You need to look at seals and gaskets coverage, and you need to look and make sure that you have the right things in place for your vehicle. But ultimately, to your point, yes, the fine print always matters in a contract, and you should always review your contract. But it's easier when you're buying exclusionary coverage when it's available to you, because it's less, it's a lot less difficult to kind of determine what's covered and what's not. Right.
Yeah, my problem in general with fine print and contracts, and not just for car warranties, but in anything, is that I'm not an expert in those things, right? So I don't really know the implications of what that fine print really means. Like, why doesn't someone offer an extended warranty that's the same as the car manufacturers?
Well, that's what an exclusionary warranty really is. It's very close to the manufacturer, right? There may be some certain things that you can't do that the manufacturer can cover, but ultimately that's what exclusionary coverage is. It's as close as to the manufacturer as you can get. And so remember, when we go back to what I was talking about before, a warranty and a vehicle protection plan are different, or a vehicle service contract is another name that you'll typically hear for this product. A warranty is something that comes with the vehicle and it's free. That's why it's called a warranty.
Right.
A vehicle protection plan is really, it is a service contract. And the important thing that you have to think about here is the other side of the equation. So particularly doing business on the internet, you can imagine that a lot of my business comes from individuals who seek us out on Google, for example. And let's say they type in auto warranty into Google. Well, also you can imagine you get a lot of adverse selection through those folks. So we have something that's called an exclusionary period, where for 1,000 miles and 30 days, you can't file any claims. That's so that we can protect ourselves on that side, so that you're not broken down on the side of the road and you ultimately go, well, this is the easiest way to pay for this. I'll just get a warranty and they'll pay for it, right? I'll get a vehicle protection plan. So the issue is there's a tremendous amount of fraud, and my shock loss period in the first 90 days, particularly for my digital business, is very high. And so you've got folks that are also trying to really work the system. And that's bad for everybody, just like in any other, people who are taking advantage of insurance companies, whether it's your homeowners or health, it doesn't matter. They actually raise the rates for all of us. So there's a lot to navigate through on both sides. And the only fair way to do it is to have a contract where you adjudicate those claims in black and white. That way there's no question. There's not a gray area, because here's the contract. And that is for the protection of both parties.
Right. So what are the things that aren't covered in your policies, your programs, that are covered in a car warranty, in the original manufacturer's car warranty?
Well, you might have like cosmetic items, for example.
Right.
We're not going to cover if your dash trim, let's say you have like a wood trim or carbon fiber, and maybe had some heat exchange, something happened and that dash trim started to come off, for example.
Right.
That's a cosmetic item. Your manufacturer is likely to cover that for you during that period, because it's really a manufacturer defect. That's a big difference, right? I mean, manufacturer defects are not going to be covered as it relates to those cosmetic items. So that's one of the big ones that I'd put into that category.
Okay, got it. So it's more mechanically oriented, the vehicle service plans.
That's right. It's about, this is coverage for something that breaks or something that wears beyond the manufacturer specifications, depending on what type of coverage you have.
Right, got it. Now, you mentioned the phrase shock loss.
Yeah.
Did I say that right?
That's right. Yep.
Okay, and what is that exactly?
So that's basically the losses that we experience during a particular time. So when our administrators build a plan, they're building, the majority of what you're paying for when you pay me is you're paying for money to go into a reserve account, right? And so that reserve account is used to pay claims. Well, without boring the listeners, what happens with different types of marketing you may do to generate your customers, they can produce different loss experiences. So if you're advertising on TV, that might produce one loss experience. Digital might produce another. The same thing might happen in direct mail. They all can produce a slightly different loss experience, and you have to be kind of prepared for that. When I talk about that 90-day shock loss for digital, what I'm saying is a lot of your losses are front-loaded. So you still ultimately have to be able to rate the plans correctly over the time and period of the plans. And for us, our average plans that we sell end up being about 4.5 years. That doesn't mean that's what our plans typically, I mean, you could have a 2-year plan, you could have an 8-year plan, but when you average it out, about 4.5 years. But you need to rate those things correctly. And for us in digital, we often are upside down early on. So here's the other thing, and this is how you were talking about, well, if you don't make more money, right, than you pay out, well, how can you stay in business? And that is a good point. The point of the overall, though, you've got, just like with any other insurance product, you've got a pooled set of money, and that's paying these claims, and you need to make sure, obviously, that there are enough funds in place to make those claims. And in our business, the other thing that you have to look out for is, let's say something were to happen to CARCHEX and we went out of business. I'm a terrible manager of my business, and we go out of business. You need to make sure that you have a top-rated insurance company backing that plan, because that gives you essentially $1 coverage, so that if something were to happen to us, your claims would be adjudicated in the same fashion that they were previously, and you have nothing to worry about. And it also means that, let's say a product was created that is under reserved, right? And there's not enough money in that reserve account, then the reinsurance kicks in and makes sure that customers' claims are going to be paid, and all of those customers in that pool are going to be paid. And so you can see these companies. There's some companies out there that are self-insured and they do some other things. And this is a really scary thing for customers. We try to explain, like, that puts you in tremendous risk, because you're backing on the financial wherewithal of that particular company versus usually a Fortune 100 insurance company that is publicly traded, where you have visibility into the performance of that business.
Right. So you shared some details as to what the plan administrators are doing, right? You're not the one that's holding the money and holding the reserves and so on, correct?
That's right. I don't hold the reserves. I don't pay the claims. And in fact, from my perspective, I would love for every claim to be paid, and my customers would be happy. But again, the administrators got to adjudicate the claims based on the terms and conditions of the contract.
Right. Yeah. It's I appreciate you sharing all these details. It's interesting hearing how it all really works behind the scenes.
Sure.
So going back to your business, you grew it from 32.2 million in 2014 to 56.6 million. You almost doubled it in 4 years. What were the biggest drivers of that growth from 2014 to 2017?
Well, I think it's a combination of many things. We have built a very what we believe to be a very good platform, and so we've been able to leverage that platform into utilizing multiple, I'd say strategic relationships. Let me just simplify it. We've got strategic relationships with some of the largest folks in the automotive space, and folks that kind of share our vision, very consumer centric and focused on helping consumers navigate the automotive space, whether it's the buying side or the ownership experience. So we have very unique relationships. I'd say that we have more strategic relationships than the rest of all of our competition combined. And so that's been a big piece of our growth. Certainly better performance in marketing, getting smarter about our metrics and our KPIs and all the things that any business needs to do to get better. But I think it's really, we focused on our reputation with consumers and our reputation on the B2B side of our business to really make sure that those things could help us drive growth. And our partners have been a big part of that, the growth trajectory of this business.
Okay, so from what I just gathered, the three drivers are: one, your strategic relationships; two, you are better, smarter, always looking to improve your marketing; and three, the reputation of your service, both on the consumer side and the B2B side.
Yeah, I'll add, this probably goes in there, I would add really our ability to integrate with these partners and our ability to create kind of a proprietary technology across the board. And so we don't outsource really anything here. All the technology we create happens within our four walls. And so integration opportunities with partners where others aren't able to kind of fulfill, not just that, but security, data security, PCI compliance in general, are just things where our competitors aren't able to keep up. So we become obviously a natural fit for folks that are looking to partner in this space. Right.
So when you said that you have more strategic relationships with others, can you share who these partners are?
Sure. I mean, I can share a lot of the public information that you can find out there. So Carfax, for example, Kelley Blue Book, Edmunds, Auto Trader, those are good examples. On the dealer side, we have an exclusive relationship with Zurich and other admins in this space, but those are to name a few.
Okay, got it. And then in terms of your marketing, you said that you're marketing better, always constantly improving it. I guess maybe this might be a good time for me to ask you about this. So I see from my tools, my intelligence tools, that you're spending a good chunk of change on pay-per-click ads. By my tools, it's looking at about 15,000 a month, and your SEO traffic value is also pretty good as well. From the keywords that people are using to come to your website, according to my tool, it's worth about $8,000 a month to you.
Wow, I wish I was only spending that a month, but so that must make us look really good. No, I'm spending many multiples of that within search every month, and
Okay.
And I think the key here is, and to anybody who, whether you're in, regardless of the business, I'm a performance-based marketer. So for me, the big strategy here has always been, for every dollar we spend, we know exactly what we're going to get back. So even in our relationships that within search, whether it's SEO, SEM, any of our strategic partnerships, we're always paying those partners on a performance basis. So I'm not necessarily buying clicks, I'm buying leads. And my partner's worried about how the economics in clicks work out, right? And they have an opportunity to make more or less money based on the way that they perform. And so this is something that I early in the late 90s, I had a digital agency and helped major brands with performance-based marketing, and I'd done the same thing obviously in my own businesses, both on the loan page and in CARCHEX. And so that's been our focus. Now there's some limitations to that as well, but for us it's a pretty good, as you can imagine, it's a pretty effective way to market.
Right. Now, are you doing your pay-per-click ads in-house yourself, or do you outsource that?
No, we generally are outsourcing a good amount of that, although we have a lot of internal talent that's managing it. So I'd say at some level, it's kind of a combined approach. But again, to make sure that the risk isn't on us, we use third parties at some level.
Right. Okay. And are you now you're from my data, I can see that you yourself are spending some money on pay-per-click ads, but you're not fully applying the performance-based marketing, right?
If there's money being spent there, it's probably just for our key terms. So we don't outsource, like the word CARCHEX, for example, right? There's no point. That's just our ownership on that particular term. But when you start looking at your long tail keywords and your other, the thousands and thousands of words that we're marketing into, that's not, you probably aren't going to pick up that spend in your software.
Right, because it's being done by a third party, and then
That's
you're
right.
paying them on a per lead as opposed to per click.
That's right.
Okay, very cool. All right, good to know. Now, you talked before about improving your marketing. Can you give some examples of how you go about doing that?
Well, it's really just improving your marketing effectiveness, right? I mean, we want to create, and in our world, our cost per acquisition has to stay below a certain threshold, and you want to continue to drive that lower. But you also want to focus on areas, at least in my experience, has been to focus on areas that are scalable. And that's a big thing, right? And also, obviously, they have to work, but it's got to be a channel that ultimately is scalable. Or in general, we're kind of wasting our time, and we wasted our time. But I would say plenty of times, over the many years, trying to figure out kind of where we should be spending, what's the right place for us, and also being really disciplined. So. We often talk about this internally, and I think that we see a lot of our competitors overspending at times. So maybe it's a seasonality thing, and they see leads dropping off, and they go, wow, well, we have to feed the business, we have to feed our sales floor, and they start overspending. Well, you're not going to find CARCHEX doing things like that. We're very disciplined in our approach, and we know how to ebb and flow through those things. Or you see new entrants who come into the marketplace and just overspend, and so that discipline is really important as you go along. Or at least it has been for us. Right.
And for your third driver, you talk about the reputation on the consumer side and the B2B side. Can you talk a little bit more about that?
Yeah. So I think. Our brand promise is customer experience above all. We live that promise. Everything we've done here, everything we've built propagates from that promise. And so if you start there, and that's really your kind of, your beacon, I think that kind of everything works itself out. So we, every piece of technology we build, every part of the experience. For example, we can screen share with you when you're when you're on with us. We have our own SMS and MMS platform. We allow you to be able to text, trying to give you the best possible experience, and most importantly, a transparent experience. We don't want you to have that dealer experience, right, where they have the blue screen and it's turned around and they're punching in some numbers and they're telling you how great it is. We want you to see everything that we see. So transparency, both on the consumer side and on the B2B side, has been really strong for us in terms of how we've kind of kept these relationships.
So when you say earlier on, you're talking about having proprietary technology. So you're referring to things like the screen share and SMS, MMS thing that you just referred to, or are we talking about some other sorts of proprietary technology?
So I'll kind of just give you a short list anyway. So our CRM systems, our help desk, our lead scoring tools, our lead distribution tools, you name our phone systems, our SMS, MMS platform. Those are all pieces of technology that we've created internally.
Switching gears a little bit, for 2019, what plans can you share with us? What growth targets are you looking for? What challenges are in the way of getting to those targets?
Well, I can share a high level. We are really focused on adding some very key strategic relationships that will drive more business, and then focusing on integrating those relationships and doing the work there. So for us, we kind of grow in it's more like kind of stair steps versus this absolute linear growth, right, where you add a big relationship and then you get a big bump. So there's a decent amount of investment into that in time, resources, and then you get your kind of bump as you execute on those relationships. So we have several of those that we're working on now at various different phases that we need to get implemented over the course of 19 and into 20.
Now, are these essentially new products that will become that you'll be able to make them available, or are they just additional offerings?
It's more about relationships that provide us with more customers. There are plenty of there's always new products coming out that is, kind of meeting the needs of the marketplace. But for us, what I'm specifically referring there is relationships that help us drive more folks that ultimately can become our customers.
Right. Got it. And any other big plans for 2019, 2020 beyond the strategic relationships?
Well, I think we're focused on quite a bit of technology enhancement around our web properties, some app that we've been kind of working on the structure of what we want, and more tools for our customers also in terms of making their experience a better experience. But that's a constant theme for us. So it's not a specific theme as it relates to 19 or 20, although I think you'll see some leaps forward in some of the things that we're doing. That's public facing technology anyway.
Okay. And what are you doing besides strategic alliances to get more customers?
Well, we do a little bit of everything. We're a little bit of television, radio, direct mail, and more digital. But our key focus, and that's a big difference. Most of our competitors in our industry, the majority of the competition is really heavy in direct mail. There's some folks out there that spend a lot on television. We think we are dominant in the digital sandbox, but we really do focus on those strategic relationships. There's lots of reasons for that specifically for us, but that's what our platform's built for.
Right. So I take it you do not do the robocalls, because you did not mention that.
No, I mean, not only do I not do the robocalls, I chase the callers. So it's very difficult, obviously, to track these folks down. And what we do, they're bad for the entire industry. I mean, you've been through the experience. I'm going through that experience. I've never seen, this is not a comment in regards to Trump in any way, although under the Trump organization, it seems like there has been maybe a relaxed attitude on some of the dialing that's going on. So it feels like I'm getting bombarded, not just in this industry, but every industry in regards to robocalls. But just like you, I'm a consumer and I get called by vehicle protection plan companies. And so what we do is when that happens, we buy the plans so that we can get the contracts, figure out who they are, figure out who's financing them, figure out who the admins are who may or may not know that these companies are robo-dialing, and essentially try to cut their legs off at the knee.
Right.
Yeah. Yep.
Good. Yeah. And how do you think they get their number? Because we bought our car, and now since then, years ago, we get messages, and they're very specific. They know the year of our car. They have a good sense as to when the warranty is expiring. They have our phone number. They have our mailing address. How did they get that information? Who sold it to them?
That's a good question. Some of these things we try to figure out too. There's a lot of theories. We believe there's non-compliant data that's being sold, maybe out the back door of one of these dealer systems, and that there's a lot of compiled data where people are trying to put the pieces together in order to create accurate VIN data. But it's been very hard to determine where a lot of this information comes from. Now, the folks that are doing it correctly in direct mail, a lot of that information comes from the credit bureaus. So they're kind of building their list the way that other industries do. But to your point, it's a bit of a mystery to us as well where a lot of this data comes from.
Yeah, it's really surprising because they knew exactly what model car we have and the age and when it was likely to expire. And I talked to every vendor that was involved in buying the car, right? The car insurance company, the dealer who sold us the car. And of course they say, yeah, we don't sell your information. Of course not.
Well, that's why I think the one you're missing is the DMS, so the dealer CRM. And I think that's the most likely suspect is either knowingly or unknowingly, that's where the data is leaving. So it's not at the dealer level. It's all that data is stored in the DMS, and there's potentially access to it. And I wonder if that, we've always wondered if that's one of the big kind of, holes in the whole stream of kind of where data sits and flows on the dealer side. But it is hard to know. But when you look at kind of how quickly that data comes out after you buy a vehicle, that's why
amazingly fast.
That's why many people suspect that there's a problem there somewhere.
Yeah. I mean, literally within weeks, if not a month or two, I started getting stuff in the mail and the phone calls. So it's shocking. No,
you're absolutely right. And the thing is, you can't buy DMV data anymore. So you can't buy, or at least in most states, as far as I know, you can't. So you used to be able to buy data, I believe, where you could get the customer's vehicle information when it's registered with the DMV, or in Maryland's the MBA, and you could get that attached to a VIN. And now I don't think that the DMVs allow that. So, it's a big mystery. It's a big problem for us. Now on the robo-dialer side, I think that's a different answer. I think they don't care, right? It's just a numbers game there. They'll call the phone book. It doesn't make a difference in what they're putting into their dialer. So that's a whole different animal.
Yeah, but even the way they do the marketing, right? They make it look very official. They make it look like it came from the car manufacturer, and it's far from that.
Absolutely, I think that piece of the equation, in a lot of states, and particularly attorney generals have cracked down on that and the OEMs at some level. But of course, if you're willing to do these things, then you really don't care. And so that's part of the issue. And again, I go back. So one of the things that I hope for in this space, I'd love to see more and more regulation in our space. And I'm in fact banking on it, because CARCHEX is one of the few companies that would do really well in that regulatory environment, whereas other companies may not fare as well in terms of the way that they sell, et cetera. It's not just about the data and how you're being marketed to. It's about what happens on the phone when you're talking to them, right? How are they trying to twist your arm to buy, or are they being consultative? Are they following up? Are they, insisting that you have to buy this today? All those things. And so there's a lot that goes into what makes a good experience, and certainly not just the marketing, but it starts there.
Yeah, definitely. So what do you see as the biggest trends that you see evolving over, say, the next 5 years?
Well, I think there's some changes in the product mix. I think you're seeing models that are moving away from the traditional vehicle service contract, and oftentimes you're seeing month-to-month models. That seems to be what the consumer likes, and there's some good and bad to that. People, the American consumer oftentimes is a little bit infatuated with monthly payment. So they actually may pay more money for something they could pay less for if they bought a term plan. But there's an attractiveness to that. And I think for companies, recurring revenue model is interesting, right? I mean, it seems to be an overarching trend that we see at a macro level in multiple industries. So that's happening a little bit in our space too. I think you see in my space in particular, there's a ton of consolidation happening. So you're seeing private equity interest at a level that I have never seen before, and strategic interest for that matter. But I think that this industry is really on the radar screen now of private equity for sure.
So who do you see being consolidated exactly?
Well, I think you see consolidation between the administrators, the resellers. I don't think you'll see as much consolidation at the insurer-reinsurer level. But I think a lot of the resellers are being consolidated, where different marketing and resale shops are kind of being bought up and aggregated into kind of one machine.
Right. So that'd be good for you or negative for you?
It depends. I mean, our strategy is a little different. I mean, I can't get too deep into that right now, but there's positives and negatives from both sides of it. I think any activity where there's a lot of interest in your space and an interest in investment in your space is generally a positive thing for both the companies and the consumers.
Yeah, I mean, I can see the competition becoming a bit more fierce if they consolidate, right? Because then they'll become more efficient and potentially might have some more marketing dollars to compete against you on the marketing front.
Yeah, I mean, sure, that's always a risk, but see, so the insulation for me is that you aren't taking my strategic relationships. You're not coming in behind me. You're not buying those relationships. And so that's one of the reasons we built ourselves with that foundation from the beginning. You always run the risk that people get big or overspend or just throw money at something, and that can have an impact on you. There's nothing you can do about that. But you try to, for us, our strategy has always been to spread our eggs in multiple baskets and make sure that we're not really concentrated in any one in particular marketing area, so that we can weather some of those potential storms.
Yeah, well, I definitely see how the strategic relationships you have it gives you a pretty formidable defense against consolidation.
Exactly.
Yeah. 3 last questions for you. Say you had a billboard. In fact, you didn't mention billboards. Do you have a billboard anywhere?
No, not currently. I don't think we've ever done billboard advertising in our many years. We have done some things like mall kiosk. We built out a really cool kiosk when back when we sponsored Dale Earnhardt Jr.'s JR Motorsports. And so that was kind of cool, where you could go into the mall and sit down and actually you'd have all the screens in front of you, and there's probably an image somewhere out there in the web of our kiosk. But that was something that we tried back in the day, but we've never done billboard advertising.
Okay, well, if you were to do a billboard, what would your message be? Keep in mind that people drive by billboards pretty fast. They only have about 6 seconds to.
That's kind of putting me on the spot. I think our message would be really focused on, and you have to figure out again how to do this quickly. Is we'd present the problem quickly, which is repair bills are expensive, right? And just not from a billboard perspective, but overall. The only thing that's growing faster than the increased expense of repair bills is like college tuition. So cars are expensive to fix. So here's your problem, which is your repair bills are very expensive. Here's your solution, right? It's CARCHEX. You can budget for those repair bills and simply call now. I'm a direct marketer, right? I'm not a brand marketer. That's not the focus of what we do. There's lots of overlap in those two things, and there's a benefit of some of the things that we do. So my billboard would be really focused on driving call to action, and getting the phones to ring or people to visit our website.
Right.
Yep.
Yeah, I'm sure if we had a bit more time, I'm sure we could brainstorm some good ideas for your billboard. I mean, no one wants expensive and surprise car bills.
No, I think that's the tough thing is that we're all, I think the statistic now is the average American could not afford a $400 surprise. And I think that's the majority of Americans. So it's a, these are, it's a real issue for people, and people have to get to work.
Yeah. Well, I don't even think it's the unexpected ones that are a bit irritating. Even the ones that are coming, right? Replacing your tires, replacing your brakes, right?
Your regular maintenance items, and there are maintenance plans for those types of things, but it's the same thing. Yeah, I mean, it's not inexpensive to maintain a vehicle.
Yeah, it's not a cheap thing. No. And the two last questions I have for you: who are your ideal customers, and what's the best way for them to contact your company?
So my ideal customers are really anybody who owns a vehicle, right? That plans on keeping their vehicle for some time. You could be coming off your manufacturer policy. You could even be under your manufacturer policy as long as you know you're going to keep that vehicle. And also folks who may be buying a used car and maybe they got a CARCHEX inspection or a Carfax vehicle history report, and they like the car that they're buying, but they don't know anything about what's going to happen in the future. So if you want to make sure that you're protected and you kind of, in that transaction, you have a bulletproof transaction, the best thing to do is get yourself a very good vehicle protection plan. So you could be early in the ownership process, you could be later in the ownership process, but if you own a vehicle and you don't have a vehicle protection plan, you probably should, and that's my customer. And there was a second part to that too. What was the second?
Best way for them to reach you.
Best way to reach is easy. It's 877-CARCHEX. That's 227-2439, or visit our website at carchex.com. And you can simply fill out a form, and we'll be back to you within seconds of submission.
Seconds? Oh, that's awesome.
During business hours, Malcolm, I'll give you that. During business hours. Okay. Right. Yeah.
Would you mind spelling out your domain name? Because you spell CARCHEX a little bit differently.
Sure. It's CARCHEX, and that's X as in X-ray.com.
Right. As you were describing your ideal customer, a question came to mind. How many customers has your company served over the years?
Oh man, that's a tough one. More than tens of thousands.
Okay.
We probably in the 100,000 plus at this point.
And I know, being the marketer that you probably analyze the demographic data. Have you found some commonality as to who your ideal customer is from a demographic perspective? Is it male, female, age 20 to 40, or something like that?
Sure, it's probably changing quite as certainly as millennials get older, it's changing. But typically, it's 35 to 55 is a sweet spot. Male, female is almost about equal. In fact, female buyers can be a better buyer. They feel very comfortable with the product. But in general, it's about 50-50 in terms of split. And what we find, and I'm not here to really speak down towards millennials or anybody, in fact. I think that you just have millennials are either, mom and dad may still be helping with their car payments. They may not be actually owning their own vehicle. They may be doing some ride sharing. As people kind of age and they have that responsibility on their own, that's why that 35 starts to be a really nice sweet spot for us.
Right.
Yeah.
All right. Well, thank you for sharing that, Jason. It's been great having you on my show today, and I really enjoyed hearing about how you grew your company so fast.
It was my pleasure. Thanks for having me as a guest, and thanks for the really insightful questions.
We've been speaking with Jason Goldsmith, the CEO and co-founder of CARCHEX, about his company's rapid growth. For interviews with other fast-growing, high-value sales companies, or to learn how we can accelerate your firm's high-value sales through automation, visit Eversprint.com.